Fox Business Alert, the shine is coming off the so-called big bank killers, at least off their stocks. Year to date, fintechs have been hammered. PayPal down 59%, Upstart down about 81%, Affirm down 85%. Then you got SoFi. SoFi is considered one of the hottest. It is not immune either. The stock down about 66% this year. And now Wall Street is raining down a slew of price target cuts today. Shares gapped down to $4.95 at the open, but have now completely turned around and are up about 4% just in a single session, right? What did I say? This is not a whiplash. It's a U-turn kind of day. The 18% drop this week for SoFi is perplexing, though, because SoFi reported record revenue, a 49% rise in total adjusted net first quarter sales of $322 million. SoFi offers everything from student loan refinancing, personal loans, financial services, including banking now. So let's bring in SoFi CEO Anthony Noto. Anthony, great to have you. You know, you guys are a bank now as well. You got the charter in January. You opened bank services in February. Banks and financial stocks are supposed to do well in a rising rate environment. How are you interpreting what's going on right now?
Yeah, I think us in the fintech landscape is looked at slightly differently than banks overall. But the reality is we have the same characteristics in our banking and lending businesses as traditional banks do. But we have lower costs since we don't have branches. We also are 100% digital, and so we do operate with a higher long-term profitability relative to traditional banks. The thing I'd say about your introductory remarks is that the whole fintech sector has been taken down quite dramatically this year. As the sector went up, I didn't think there was a lot of differentiation among the companies, and quite frankly, not a deep understanding of what companies did. And on the way down, that's also the case. And what we're trying to do is educate investors about how we'll navigate this environment. Now, as you mentioned in your upfront remarks, we have three different businesses, one of which is a technology platform, and we power other companies that are going direct to consumer and financial services. And that piece of our business was about $60 million in the quarter, and it's highly profitable. We do have lending. Our advantage in lending is that now we are a bank. We can use our investors' deposit, our members' deposits, to fund those loans. Sure. And we have a lower cost of funding. So it guarantees us funding from deposits and at a lower cost, which allows us to navigate the higher rate environment. Now, the last point I'd make is we're taking a really unique approach to check-in savings. We're offering 1.25% interest rate now, and we can afford to do that because our costs are so much lower now that we are a bank. And in a rising rate environment, giving consumers that type of interest rate, if they do direct deposit, is a huge differentiator.
Man, I'm pretty sure I'm getting less than 1.25 for my, and I'm a direct deposit member for sure where I am. This is a very tough environment for investors. I mean, even your biggest believers are having trouble because your fundamentals look not just solid, but showing actual real growth. I mean, I saw your total member numbers are up 70% year over year. You're almost at, what, 4 million members now? Why do you think, as you say, now we're seeing differentiation, the separation of the men from the boys, the girls from the women, however you want to put it. Why do you think SoFi is getting painted with the same brush right now as other fintechs that have weaker numbers?
It's just going to take investors a while to really understand the differentiation. So people are worried about the macroeconomic economy. And if we hit a recession, that typically results in higher credit losses. And so some companies that are only in lending are down massively this week. We are also in lending and we have exposure there, but we focus on a higher segment. So we're hitting the mass affluent and also higher credit. Our average income for our unsecured personal loans is $160,000. And the average FICO score is 740, which is a prime credit rating. There are other companies that are in the lending business only, so they can't offset it with things like the technology platform. So there's concern about the future. And the question is, in the future, if there's a recession, who can weather the storm the best? And It's going to take a while for people to figure that out.
Figure out that you believe it's you. SoFi student loan originations, they actually fell, I believe, quarter over quarter. I get it, largely because the student loan moratorium was extended till, what, August 31st. President Biden's talking a lot about the cancellation of some student loan debt. How do you view that?
Sure. That's also another uncertainty. We're assuming that federal student loan payments will not be required for the entire year. Even though he announced the moratorium would end in August, our assumptions in our guidance for $1.5 billion of revenue versus about $1 billion a year ago assumes that we don't see recovery in that business and that he will inevitably give some forgiveness. Now, that forgiveness probably won't apply to the people with the demographics that I mentioned, $160,000 of income or higher. It would be great for us if there is forgiveness, and
Really?
those that
Okay.
aren't going to benefit from forgiveness refinance, because we can offer them a better rate as rates start to go up.
Anthony, unrelated, but you know, I've followed you since you were an analyst at Goldman Sachs, and then you ran, at least you were chief financial officer at the NFL. Then you were at Twitter. You were in the C-suite at Twitter. I don't know if you still have buddies over there. What do you make of all that's happening right now with Elon Musk at Twitter?
You know, I'm not there to
Right.
have an in-depth perspective. I think he sees what many of us see. I'm still a large shareholder in Twitter. I have not all of the stock I received when I was there, but still a sizable piece. And, you know, I think they have the best content in the world at Twitter. Anything you want to see in real time, they have it. The challenge is finding that content and making it a mass market product. I know there's a lot of focus on safety as well as the health of the platform, and that needs to be solved. But the product is still hard for the mass market to use and really unlock that content that they really pay nothing for. You know, I think that the company's made great strides since I left in 2017. But, you know, someone like a Facebook has 2 billion daily active users, and Twitter, I believe, has better content, more relevant content, and better conversation. And that should be the bar. And I think that's the opportunity over time. And I think that's what he sees and Jack and others see.
Yeah, well, it's at 46.40. For now, it's 54.20, his buyout offer per share. You're okay with that as a shareholder?
You know, I'm not going to comment on the price of the stock. I'm just not that close to it. I appreciate it.
I'm guessing, yeah, I mean, it's certainly higher than where we are right now. But Anthony, great to see you. We're watching SoFi, which, of course, as I mentioned, intraday, and I like to watch this, it has definitely turned around now, up 4.5%. Good to see you.
Thank you, Liz.